Hey guys, what's up? Alec back with the daily stock market, and today is just a red day for everybody, huh? If we scroll down, a lot of different stocks are red. So that means it's a great time to buy, guys. But make sure you're not spending all your money at once, because if we see more red throughout this week and next week too, you definitely want to have some money to buy into the dip if we do see one coming. Now, today's video is actually going to be a banger. It's going to be about the best stocks under $30. So we're going to rattle off 10 different stocks, my favorite 10 stocks under $30. And I know a lot of you guys like the smaller stocks, so I really hope you do appreciate this video, me going out of my way and picking up the 10 best stocks under $30. And these are some really good stocks too. I definitely invest in all these stocks. I'll show you some of my position. And as you guys can see, we're up significantly in the past 3 months, still about 41%. The last month still looking good. And even the last week is not looking too shabby. We have a little bit of up and down action, especially with that down action that we've been seeing today. So if you guys are seeing red in the market, that's a good thing. You know, stock market doesn't just go up in a straight line forever and it's just green every day. It's healthy to have a pullback on some of these stocks and see them come down a little bit too. So don't freak out if you do see a red day. It's not out of the ordinary for the stock market to have a red day. So don't just automatically just jump to, oh, a crash is coming, because there's been one red day. But if you guys do want me to make a video on a possible crash coming, comment below and I'll be more than happy to make that video for you. But without any further ado, let's get right into the stock market video, 10 best stocks under $30. And guys, let's try something new on the channel here. I'm actually going to put these in order of my favorite plays, and it's going to go worst to best. So we're going to start with number 10 first. So SNDL is number 10, and then we're going to get to my more favorite picks under $30 as the list progresses too, and eventually we'll get to the top 3. So first we have SNDL, all your guys' favorite hype stock, down 53% in the past week. So that's a big staple of why I don't like investing in hype stocks, because I don't like to possibly lose 53% in a week, and you set yourself up for that when investing in hype stocks that go up a crazy amount. With that being said though, I do like to buy into dips. That's one of my favorite things to do as a stock market investor, is buying in dips. So if this stock gets a little bit lower to $1.50, like I said in my last video, I'd actually love to buy into this stock, because you see the last support is actually right at about $1. I'm not saying it can go that low. Obviously, it can go to $1, so be prepared for that. And if it gets that low, I probably wouldn't pass it up either. But with that being said, this is a good swing trade, and it can easily get to new all-time highs. And this stock's $1.80, so it definitely had to make the list, and it is going to be one of the cheaper stocks on the list. Okay, so next up is going to be AMC, ticker symbol, and as you can see, they're down 4% on the day. So right now, this is a great one, and the first two, this one and the last one, are actually going to be the most risky on the list, and going to be some of the cheaper stocks on the list too. As you can see, they're still up 93% in the last month. They spiked up to $19, and right at about $5, I'm going to say is a buy for this stock. $5, even $5.50. If you plan on holding for at least a month to 2 months, I think this can be a great swing trade play, and I think it can get back up to about $8 or $9 a share. So if you're looking for a cheap, risky stock that can possibly double your money, it's not a guarantee, obviously, nothing's a guarantee, and this is definitely a riskier stock on the list. Definitely have your eye on this one if it does fit your criterias, but if you're looking for a safer stock, wait till some of the other ones that we actually get to on this list. All right, the number 8 seat right now is going to be TLRY, because it's still a little bit risky, but it's better than those other ones. It's not as risky. It's more of a longer term play, TLRY. And it's down 8% in the day is why it's on the list, down 42% in the month. So it's a pretty good buy right now, in my opinion. As you can see, it's even closer to the support that SNDL is. So right at about 25 to about $30, I would say is a great purchase point for TLRY, especially if you plan on holding this one for around 3 months to 6 months, I think you can actually see this go back to an all-time high, and there's a possible 2x on your money play right here. Obviously, this one does present a little bit more risk, just like SNDL. In my opinion, this one does minimize your risk a little bit more and still has huge upside with that percent gain, the 2x on your money. So if you're looking for a Canadian stock, this can be a good play. If you're looking for a cheaper stock, this can be a good play. Or if you're looking for like a Mary Jane, an MJ stock, this can be a good play and should be on your watch list. Now, the next one on the list, PLTR, is actually up 5% on the day, but it's down 18% in the week. Still up 9% in the month and was even up at 42% at one point. You can see that this one's right at about a support. A popular resistance was about 29 to 30 to 28. And as you can see, it's now turned into that support level for PLTR. Anywhere between $25 and $30 is where I'm personally going to be buying in PLTR at. And I think this is a great opportunity to swing trade up to $35 or even $40 a share, or even to new all-time highs if you plan on holding anywhere from 2 months to 3 months. This is a great option, should definitely be on your list. I actually just started a new position in this one. We have $153 at an average cost of $28.67. And I'll be continuing to add to this. The lower it goes, I'll just keep on adding. So I want to be adding more right around $25. Well, I'll probably even buy like $300, $500 worth if it does get as low as $25 or $23 a share. Okay, so the next one on the list is a $20 stock. It's a disruptive stock in the healthcare industry, targeting millennials with a subscription-based service. Here you'll see they're down about 8% on the day, is why they're making the list, down 10% on the week. So these are good buys right now, guys. So these ones, a lot of these stocks that we're talking about on the list, not only are they under $30, but a lot of these are good to go out and purchase right now. I'm giving you the price points too on where I would buy them. And I would want to buy this one under $20, anywhere from $15 to $20 on HIMS is going to be great for a long-term hold. This one's a little bit back on the list just because it's a little bit more risky, because as you can see, it went up 88% in a month, or less than a month, a couple of weeks. So anything that does that quick does involve a little bit of implied volatility, especially when you're going to be buying into it after it surged that much. Now, Cathie Wood also, this is one of her more recent picks. So if you are a long-term holder and you're looking to get into a disruptive healthcare stock, definitely look into this one, do some research. Anywhere between $15 and $20 is where I'm going to be personally adding more of my position to. And as you can see, we've been buying this one for a while. January 21st, we bought this one at $16 a share. So it's up to $20 a share now. So we were buying and we had about a 40% gain on HIMS. So we had about a 40% gain on this one, and so did a lot of my students too, because I put in early that we were buying this one. And we already took profits on a lot of this. As you can see, I sold out a lot of my position already. We did a trailing stop loss, but I'm going to be looking to get back into this one and build a new position as it goes down to 15, 18. Now, there is no guarantees it will get that low, so you might want to just dollar cost average anywhere between $20 and $15 a share and buy more as the lower it goes. All right, guys, so after that, we have HUYA, ticker symbol HUYA. If you need to diversify into a Chinese stock, where it's always good to have a little bit, at least some international stocks, and this is also a gaming stock too, if you're not into that sector. This stock's down 7% is why it's on the list today. And the past week, it's still up 12%. And the past month, it's all the way up 38%. Now, I'm personally going to be adding more money right around $25 to $28. And hopefully, if it goes a little bit lower, to like $20 a share. I don't think it will. I think the lowest this one will go is like 27 or 28. We already took a lot of profit on this one. We're up over 41%. We only have $150 left of market value because we sold a lot of our position off. But as you can see, it's headed back down on the way down. So I probably wouldn't buy this one yet, at least until it hits the support of about $26 or $27 a share. And then I would only buy probably a small amount at that point. And then as it goes lower, if it does go lower, I'll be buying more and more heavier. So that's typically how I like to buy stocks. I usually don't just buy like $800 at one point. I usually dollar cost average in. So if it gets to my price point, I'll start buying a small amount. And that's why you'll see me typically put like a range of price points or talk about a range of price points. The higher price point is where I start my position at. And then the lower price point is where I typically buy like heavier at. So you typically want to have like a sliding scale like that. So it's not just like all at once, I just put all my money in at one point. Oh, it went down to 26. Let me just put $1,000 in. I don't really do it like that. I'll put in like $300 if it gets to that point. And then if it gets lower, I'll actually dollar cost average in over a period of time. Okay, so the next two on the list are going to be some I'm actually super excited about for the long term, and it's ticker symbol RKT, Rocket Companies. This is actually a mortgage company, and as you can see, I own about $450 of market value in this stock, and at an average cost of $20 a share. So I definitely want to buy more of this stock for long term, and as you can see, it's going down. In the past week, it's down 3%. In the past month, it's still up 4%. And in the past 3 months, you can see it's been going up and down. So this might be even one you want to consider for a swing trade because the patterns are very typical. If you go to the year, look how much it follows the same support and resistance. And right now, it's closer to the support and closer to a 52-week low is why I like this company right now. And it's a newer one on the stock market, so it hasn't got too much attention yet. So once Wall Street actually looks at the stock and realizes what's going on with this company, I think that we can actually see a huge spike, 20, 30% gain on this stock very quickly in the next 2 to 3 months. So definitely have your eye on this one. It's one of my favorite ones on the list. As you can see, I even have about $500, $400 in at the price point it's currently sitting at also. In my opinion, this is a add money to play. Now, ticker symbol SFT is one of my favorite stocks under $30 personally. It's actually top 3. And as you can see, this one's up 2% in last week, 26% in last month. And it was following a support and resistance for a while. And it actually just broke out of that resistance. And it's making a new support and resistance right now. So as you can see, we own even $531 of this position. We're up 23% already on this stock. We've been in it for a while. And I think that this is a good add money to play for long term. If you plan on holding this stock from 6 to 12 months longer, they're kind of like a Carvana, right? Carvana's market cap is around 80 billion. Keep in mind, this is a very small company right now. So you'd be getting in at basically the ground floor and growing with the company very early on. So this is a very early on company and has a potential of having a market cap of around, even if it gets to 8 billion. And if you go back and look at Carvana, this is why I like this stock too, because Carvana is one of the big competitors. Carvana. And what you'll see, what was the price point 3 years ago? Right where Shift is at right now. It was $21 Carvana was 3 years ago. And now it's a $300 stock, guys. So this is a huge industry. The market cap's $30 billion on Carvana. They rent cars, they buy cars online. They buy and sell cars online is a big thing they do. And Shift, one of my friends actually has already used Shift, and they're giving better rates than CarMax and a lot of other car companies too. They'll buy your car for like $1,000 more than CarMax would, and CarMax is like a leader in the industry. So I think that this one has some huge potential at only a $800 market cap, a $10 stock right now. I think in the future that this can easily be a $30, $40 stock in the next few years. So it might be one that you want to get in early on and hold for a long time. And then after that, we have SWCH, $18 a share right now. This is a great add money to play. I'm going to be waiting to add a little bit more money until it gets closer to about $15 a share, though. I think between $15 and $20 a share. This is a great add money to play. As you can see, they even dipped down to $6 at one point. So you definitely should have been buying. More recently, they dipped down to like 14 or 15. So if it gets that low again, I definitely wouldn't pass it up. Also, I have about a $500 position in this stock at about $17.80 a cost basis average. Now, like I said, I'm gonna be adding probably $500 more to the stock if it goes as low as $14 or $15 a share. I think this is a great long-term play, and this is a good one to actually look into yourself. Do your own research on this one, see what's going on with it. It's still early on, and if you look at the market cap too, it's only $4 billion. So I think it can at least 2x over the next 1 to 2 years. And we're coming down to the top two stocks. I'm actually tying number one. So this is a number one, and the next one's going to be a number one. I gave you guys a bonus, so we did two number ones here. So there you go. And what you'll see is DBX is going to be one of my top contenders for favorite stocks under $30 to buy right now. DBX, you guys know I've been loading up on them forever. I own about $2,000 to $3,000 worth of DBX because I own more on my Webull account, a lot more, and I also own more on my Fidelity account. So we actually loaded the boat with DBX right around $19, $20 a share, and we actually rode it all the way up to about $24, $25 at one point, and we sold out a lot of our profits, and now we're trying to buy back in too. So if it gets as low as $22, $21 again, I'll be buying more DBX, and this is a good hold for long term. So I think that this one can easily be going to $30 a share, $35 a share. It's going to take a little bit of time with this one. And as you can see, the trend with all my favorite stocks on this list is they're not super, super high. If you press the 3-month mark, it's not like they're up 300%, 400% like a lot of the stocks that you guys like to talk about. This is a stock that's very undervalued. As you can see, it's not at an all-time high or anywhere close. We're still early on in this stock, and it's a big name stock, a big name brand. And a lot's going on with this one. If you look behind the scenes, there's a lot going on. So you might want to do your own research on this one also. They're definitely a leader in the space and one that you're going to want to have on your profile, especially if you can get in at $21 or $22 a share for long term. This is definitely one that you won't want to pass up. And then my second number one stock is TTCF, as you guys probably guessed, under $30. This is kind of like a Beyond Meat company, but it's at a smaller point right now. It's still pretty big, as you can see, a market cap of $1.8 billion. But in my opinion, it has a potential of 3xing its market cap in the next 3 to 5 years. This one you want to go in with a long-term mindset, but it can go up a lot in the short term. As you can see in the last 3 months, it's 43% gains. And I think it probably can do that in another 3 months as well. Now, with that being said, the support is closer to $23 or $22 a share. So if you can get in at that point, I wouldn't pass it up. But there's even a lower support around $15 a share or even $20 a share, which I don't think will get back to like the $15 or $20 range. So in my opinion, you want to buy right around $20 or $23 is where I'm going to personally be buying. And if it does go as low as $19 or $20 again, that's when I load the boat. And if it goes as low as $15 again, that's when I put a lot of money in this stock, and it'll probably become one of my bigger positions in my entire portfolio if it does go as low as $15 or $19 a share. For a long-term hold, it's going to be like a money park that I'm not going to touch for at least 1 to 2 years, if not longer, 3 to 5 years. So this is a super long one if you want to just set it and forget it, not worry about it, not want to check up on it all the time. This is still a very early on company, as you can see. So they have a lot of growing to do. And remember, it's like plant-based food. So we're already up 10% on this one, over $600 just on my Robinhood. We have like another $600 on my Fidelity. So it's one of my bigger positions, but I can see it growing into one of my biggest positions if it does go lower and lower, which I would love to see the stock do. So guys, I hope you really did enjoy that video. I didn't want to make it too long, but as you guys know, my videos always turn out to be pretty long. But I know you guys don't mind and you like hearing all my thoughts and the detail behind all these different stocks. So thumbs up on this video if you did enjoy it. Share it with a friend if you think they can see value in it. And we're up 16% in the last month and even more in the last 3 months. So if you need help getting your portfolio to look like this, send me a DM on Instagram to get on the waiting list for my training program. Right now, I did shut down signups on my portfolio. I did shut down signups on my content creation because we are at max capacity and I have to focus on making content daily for you guys too. So I don't want to overwork myself and I'm working super hard for you, but I am starting a wait list. So if you want to be first on the list when I open signups back up to get on the training program, DM me now and I'll put you on the list and qualify you. I'll send you over an application so you can fill it out and we can actually qualify you the right way. This program is made for beginners, by the way, so it's not like you have to have a ton of experience or qualify for anything super hard. We just ask you a few basic questions. So guys, I will see you in the next video, and remember, don't time the market, buy the market. Peace.